So as you can imagine, insurance is a very important topic in what we do every day as risk managers. I'm sure it is for a lot of you as well. Everywhere you look, you need insurance. So welcome to the Future of Insurance conversation, in which we'll discuss how the insurance industry is changing, with a particular focus on property insurance, which affects residents and business owners alike. With us today are the official insurance experts of the Latin Builders Association, who many of us turn to when we have questions on this matter. So let's get started. First, I'd like to offer each of our panelists an opportunity to tell our attendees a little bit about themselves and their respective companies, and then I'll ask some questions which will hopefully invite some exchange between our panelists.
How are you guys? My name is Hector Echemendia. I'm a partner at GGA Insurance Group. Joe couldn't be here today, but I'm filling in for him. We do commercial insurance, anywhere from contractors to HOAs, condos, you name it. We do a lot of insurance for the LBA members. So today we'll be talking a little bit about how the property market looks, what the future looks like, and hopefully we get a little bit of clarity.
All right, well, thank you for the audience that's attending this riveting conversation on insurance. It's always the most exciting thing to talk about. We'll hopefully not put you to sleep, but I'm Dan Odess, president of GlobalPro, where we manage your risk to recovery. Yes. We've managed more than $1 billion in recovery, as well as the placement of thousands of policies for commercial property owner-operators. And we do a big part in the construction and development space. A lot of what we do is focused on helping developers or newly turned over associations and managing construction-related damage losses, as well as reviewing their insurance and making sure that what they have is the best product that they can have at that time or can afford.
Great, well, thank you. Thank you for introducing yourselves. There's plenty of narratives about insurance companies in Florida and different participants who contribute and affect their premiums, particularly property insurance rates. As a questions for both our panelists, beginning with Dan, what is the current state of property insurance in Florida, and can you offer your perspective on what is the real issue versus what we read in industry reports? Who's winning and who's losing?
So it's a bit of a loaded question, and probably could write about a 1,000-page memo on it. But the short and concise is the consumer is absolutely losing. The insurance industry is winning tenfold across the country. We have offices in South Florida as well as in Dallas, Texas, and New York. And we manage insurance both domestically and internationally. And I can tell you as a whole, it's ironic where the admitted insurers are exiting the market one after another, whether it's through alleged insolvencies or mismanagement of funds or allegedly, again, maybe the disasters that they want to blame their malfeasance on. And then you get into the surplus lines market and you see these publicly traded companies, these behemoths that have multi-billion-dollar balance sheets claiming that they're actually losing money in this market. And they own the retail companies, or they own even the agencies at times that are actually selling and moving their products. And some of them even own the reinsurance companies that are allegedly contributing to the rise of the cost of insurance in the South Florida market. And you scratch your head as to where's the accountability. And with a lack of accountability that we have right now with the current legislation, as it is written today, I don't see any near changes in that. In fact, we see a trend towards more costly insurance, less of a product, meaning you're paying more for a hell of a lot less. The entire legislation focus is on purely the cost. And as if you heard me speak earlier briefly, had the honor to be on the stage with all its very well distinguished individuals. I made a comment about there's so much conversation around the cost of the insurance, and there's almost no conversation about what's actually in those products that you're buying. And I know that my fellow broker friends and agents out there are trying to find products for businesses, particularly in the construction industry, that actually do insure against risk and don't simply check a box compliant with their banking partners, but actually will be there for them when they do actually have losses. It's tough. It's hard to find. It's hard to find something that's even meaningful, even at the price that it's being put at. And a lot of it, sadly, on the banking side of things, there's less conversation about what's in those products, but I truly don't believe that if a lot of banks looked closely at the products being sold, that they really will feel warm and fuzzy about what their risks are actually being protected. And most claims that we're seeing today are being managed or paid based on sublimits, not the actual limits that are being required by the banking industry. So when you experience, for instance, community associations, good luck finding many community associations that actually insure against the total value of an actual water loss, let alone a hurricane. And there's a concept called insurance to value, and we really saw that play out, sadly, during Surfside, where you're insuring to a value, not the actual appraised value of the actual buildings themselves. And as a consequence, you're electing to underinsure your association because of a reserve issue, really the money that you don't have, and then on compounding that, you have the reserves, et cetera, and you can get into a much, much longer conversation. But to get back to where I started, which is that the consumer is losing and the industry is winning, and every sign points to the insurance companies making money despite what they're doing. One of the largest investors in real estate in the country today that backs a lot of the deals that we see are insurance companies. So when there's an economic downturn, well, they have to make up for that. Why? Because they have investors, they have shareholders, stockholders that need to make up for those losses. Did it have to really to do with the hurricane? In fact, after a major hurricane in a local market, guess what you do see? A lot of spending. You see property values typically actually go up, not down. But they're blaming the hurricane as the reason why they're losing money, and it just doesn't add up.
Dan, thank you. That's great insight. A lot of good, valuable information. As a follow-up question to Hector, how do you see the property insurance market in Florida over the next 10 years?
Great question. Kind of piggybacking on what Dan's saying, it is getting more and more challenging for us to provide these products to our clients because there's less and less carriers willing to write risk, willing to write something near the water. So therefore, that's been kind of the hurdle for us, is finding that product, because everybody seems to be leaving us. So with that being said, what do we see the market looking like in 10 years? As of right now, everything we're seeing, it kind of started on a 3-year trend, 21, 22, 23. It's going to be some bad years. 24, they say, is going to be another increased years, anywhere from 20 to 100% increases. Then 2025, supposedly, should stabilize the market. More carriers should be coming into play. And that's really what we need at the end of the day. More markets coming into play, carriers, make it more competitive, more diverse market. But we are seeing syndicates and programs like the SRU program. They're using 10 different carriers to layer the policy up. And I can't imagine what it's like for you on a claim side to deal with that. Who deals with which one, you know? So ultimately, where do I see it in 10 years? Hopefully by 2025, we can get some stability. Hey, this is where the rates are. They might go a little bit, but we're gonna stop seeing that 30, 40, 50, 100%. I mean, in Brickell, we have condos that have gone up 200%. So it's only gonna increase. Obviously, try to talk with your local agent, try to talk with your agent, try to see what markets are out there, how we can get creative. And just, that's kind of where we're at with the market. We don't really know where the stability is going to come in, but hopefully in 2 years, we can get a little bit more stable, more markets, aka more lower prices.
So 2 more years. And Dan, you offered an honest assessment of the industry, and I'm curious as to your take on what is truly causing the rise in insurance rate. If it's not the lawyers, contractors, or public adjusters, what is the contributing entity?
Well, as I mentioned before, there's many different, it's such a complex thing, insurance is, and it's a necessary evil, I will say at this point. Because it does, insurance is a good thing. Insurance makes sense. Insurance, when it was first thought up or created in the pub in London, hence Lloyd's of London, it made sense. It's meaningful. It's something we need. In fact, when it works, it's incredible. It saves businesses. It makes the economy move. It is such an important part of it. But there's a lot of talk about why the Florida system particularly is broken. And interestingly enough, though, when you investigate through public records requests, the information that is being allegedly supporting their initiatives to clamp down on public adjusters and contractors and lawyers and one-way attorneys fees and whatnot, the interesting thing that you will find is that there was a recent public record request that was published which showed that between 2017 and 2022, more than 105,000 consumer complaints were filed against insurance companies. In that same time, there was less than 100 filed against public adjusters. 105. There's a value penguin report that was issued in 2020 that talks about the growing dissatisfaction amongst consumers. And it showed that 67% of consumers said they were dissatisfied with the settlement of their insurance claim. And it was and by the way, that was more than double the prior study that was done in 2018. So there's a growing amount of dissatisfaction. And one of the things I talked about is this hyper focus on cost, and we're not talking about product. And there's a lack of competition in the market. There's this idea of these middle agencies that sell or wholesale the products to the retailers, and the ownership and the disclosure of the money and where the money goes and how the money's being used, or why they actually need reinsurance or the type of reinsurance that they're buying, and a lack of accountability. If you have 105,000 consumer complaints being filed versus 100, is the issue really lying with the few consumer advocates that are helping consumers? In fact, if you actually look at the fraud complaints in the state of Florida, which the CFO's office, Jimmy Patronis, issues on a near monthly basis, it's not public adjusters, it's not attorneys, it's not even property insurance agents. It's most other agencies that are selling other lines of insurance that are in fact committing the fraud. But fraud is not being stamped out. If anyone has seen the actual fraud investigations that go on in the state of Florida, you'll know one thing, that it absolutely lacks resources. And one of the industry leaders in policing the efforts to stamp out fraud is actually the Florida Association of Public Insurance Adjusting. And they have opened up like major hotlines and websites and been a part of the conversation to lead the way in trying to pass more reforms in an effort to stamp it out. But when they do that, what they're realizing is that, again, where they're looking or where their accusations are being made is not exactly where the issues are. And what we're now seeing play out in a bigger picture is with the recent Washington Post article that came out. I don't know if anyone saw it. Us boring insurance people love reading these stuff. It's all fun and sexy and you want to jump into it. It basically showed a locally admitted insurer is slashing the benefits owed to hurricane victims by up to 80%. And there's hard proof of it. There was hours of public testimony just given at the Insurance Banking Committee in Tallahassee against these reforms, further reforms to public adjusting. And there was a ton of, on the eve of the legislation that was being proposed, which passed unanimously, for one-way attorney's fees, there is a class action lawsuit filed which was led by independent adjusters representing insurance companies whose reports were being modified and changed without their knowledge, for reducing the value of the benefits being paid to homeowners. They filed a class action lawsuit, and it got very little attention, and this law passed. We're curbing one-way attorney's fees. Again, all these efforts to disincentivize professionals like myself or any other consumer advocates from providing services, as well as obviously making it harder for you as a consumer to do anything about what they're doing. So is there light at the end of the table? I'll be honest with you. In recent conversations, and Governor DeSantis just announced that they're doing a huge investigation into what's going on, because it kind of looks like as if right now, to me, the legislators have a little bit of egg on their face, because the last year or two has been this big focus on why rates are higher is because of 70% of litigation in the country and everything else. But you don't pay premiums with percentages, you pay premiums with dollars. And when asked about the dollars, they don't produce the reports for the dollars. They just keep reciting back to the percentages. And when they ever even mention anything about dollars, they pick on a few lawsuits. But the reason why they have that information is because a jury decided that an insurance company did something wrong. And one of the examples I was just recently given by a legislator was that a $400,000 claim was awarded to a policyholder and a $1.2 million was awarded to the attorney. I said, but the only reason why you know that is because the claim got denied. They sued their insurance company, went through 4 years of litigation and proved that they did it wrong. And then a judge decided how much the value of the attorney's time was worth and awarded them $1.2 million. What is wrong with that process? Why didn't they just pay the claim?
That is very insightful. I didn't know that. Very good. And Hector, what are your thoughts on this? As far as, what are the contributing entities? Dan said a lot there. Shocking to me to find out, that Washington Post article where these insurance companies are really not paying these claims and sort of acting in bad faith.
Well, Dan said it very well. And obviously we look at things a little bit holistically. We also do work with the carrier side as well. In our opinion, everybody's losing, I think. Going back, consumer starting number one and everybody there. Obviously, we look at loss ratio reports from the carriers. That's where we get our information. But ultimately, I definitely think there needs to be a better bridge, a better gap between reputable companies like yourself and larger carriers and saying, hey, let's get this ship right. And when I send you a claim or I send you an evaluation, it's going to be legit. It's face value. We see that a lot with Progressive Insurance. Progressive Insurance, one of the best insurance carriers there is out there, especially for auto. And they work hand in hand with a lot of network body shops locally that are reputable, have been around for years, and they don't even look twice before they give an estimate, they approve it. So I think going back to that, I think if we can continue to work together, I know it's hard on your side, but ultimately...
Well, interesting enough, we're actually now being solicited by insurance companies to help them with their subrogation efforts, because one of the lesser but bigger reform issues that was addressed in the first special session last year had to do with homeowners insurance companies randomly suing community associations every time water hit their unit owner's floor and paying claims. They would literally sue and claim negligence, and that drove up the cost of liability insurance. That's an insurance company suing an insurance company. And it was a lesser known or discussed reform, but to me is probably one of the biggest glaring issues. Wait, hold on one second, time out. You mean to tell me that it's so bad that you have to pass a law to tell another insurance company to stop suing another insurance company? And now we actually do have insurance companies that have reached out to us, seeing that we're able to provide the types of services that we do to any sort of policyholder or interested party, which is what they become through subrogation, to actually go out and represent their interest and put together cost estimates and do these things for them. But the big news last year, the first session was AOB, slashing AOB. And by the way, something needed to be done there. Don't get me wrong, the contractors were largely doing things in a reaction to a lot of bad actors on the insurance company side, but it just got out of hand where the insurance companies completely shut down communication on their side, and the contractors were really left with no other way of resolving the issue but suing. But then it just became practice, right? It was just like, whatever, I bill it, I sue them, I bill it, I sue them. And that wasn't the answer either. So reform needed to be done there. We get it. Most contractors I know don't engage in that type of practice of just simply suing. They were trying to collect first, trying to work with them. But you do see some really aggressive auditing, if you will, on the insurance company side when it comes to the mitigation bill. So again, I mentioned, we have this live broadcast that we keep doing all throughout the entire show back here, and I've said it a few times where one of the things that we are seeing right now happening is, and something I mentioned earlier, is about the sublimits, and I can't impress upon anyone else, the future of insurance lies in the sublimits. So for any contractor developer out there that's buying OSIP, RAP policy, CSIPs, self-retention, looking at these things, I think one of the biggest takeaways you can have from this session today is really start to look at your sublimits and also on your soft cost, hard cost evaluations and what's going on there. You're going to see some of the most insane language and limiting factors that I don't think a lot of contractors, builders, being at the LBA, might as well mention this, they're not really considering that when buying the insurance. And we don't sell product. That's this guy over here. So I know he's shaking his head at me, and I know he agrees with me. But really need to look at that stuff, because that's where I'm seeing on the builder side, where coverage is being stripped, but the price is going way up, too high for a lot of the contractors to even make their margins.
If you go back, a lot of contractors right now that might be in here, if you look at your GL policy, you might have a condo exclusion, track home exclusion. A lot of people don't even know this. And we get a lot of clients because we're like, let me just see your GL policy. Do you do condos? Yeah, of course. Well, you have a condo exclusion, track home exclusion, town home exclusion. So going back to Dan, one of the things that we do with all our clients is we gotta go through the exclusions. We pull them. Hey, carrier, send me the full exclusion. Let me read it line by line. We've had calls with Friedman Scalar on a couple projects that we'll get on the call, making sure the language is right, that everybody feels safe and comfortable from a developer and contractor standpoint. But yeah, definitely making sure you're reading your policies, not just with your agent, but on yourself. And if you have some counsel, it's always good to give it that second look.
Definitely great advice for contractors and subcontractors and developers. We talked about competition. Obviously, a lot of competition is good. It's good for the consumer, for choice, cost. Hector, do you see any newer carriers or carriers coming to the Florida market?
Great question. I get this question a lot. So we have heard through the rumblings. There are a couple companies that are coming back into play. One of them specifically just left in November, Westchester. And supposedly now they have capacity and they're gonna open up the gates. And what we're hearing is what they're really trying to do is tighten up their language, making sure that the language is suffice. And the main thing we're hearing, and we're seeing it from our renewal side, is 10% is gonna be the new norm, deductible. That 5% wind deductible is no longer going to be a case. It's going to be 10% the new deductible. But we are hearing a couple carriers already getting into play on the personal line side and on the commercial side. We don't think it's going to maybe Westchester this year, but the reality is in the next year or two, we should see some more carriers come into play. But going back to what Dan said, it's going to have some strict language, strict guidelines. So it's still going to be tough, but hopefully it lightens the pricing at that point.
Thank you. Great answer. And I can tell you as a banker, I'm getting calls from a lot of our clients that are asking if a 10% deductible is acceptable. So we're also working through that on the banking side. So thank you. Dan, shifting away from property insurance and going towards builder's risk, which may be of interest to some of the attendees here today. Is there enough competition in this sector to help rates stabilize? Or is the incumbency and familiarity effect will keep companies and insurers together year over year?
What I actually see, one of the bigger trends I'm starting to see, particularly in a tougher economic time, is partnerships amongst contractors to spread risk and cost. I think the other one that we're seeing a lot is higher self-retention, bigger, more robust risk management departments, trying to sell this idea of we are risk adverse, we're better than the other, look at our partnership. But I honestly think it goes back to the banking, because many of these projects don't exist without it. And I think it's the bank's tolerance which is going to control really where the market's going to go. And I have seen some recent actually loan docs on another project. We look at the insurance requirements and they're non-conforming with the current environment we're in. So I think it does take a lot of creativity on that side. But I do think down the line we're gonna have to find some alternatives, some sort of captive amongst the industry. I think organizations like the LBA are gonna become very important part of that process by going out to market to bring its members options from a particular insurer or an agency. And you see that actually in other industries, particularly the hospitality industry. There are particular programs that are tailored for members of certain organizations in order to belong to those organizations, you have to meet a certain requirement, minimum thing. You do this continuing education. So, and there's proof of it. There's actual statistics behind it that shows that they are risk adverse. If you participate, you're in good standing with your membership there, and you are a part of that process or that membership. And so I think that you're going to start to see some more of those trends on the construction side, because right now, I mean, insurance is cost prohibitive to progress in construction, 100%. So I think people need to get more creative with it. I don't think the forecast is too shiny and bright with regards to our traditional means of insurance and financing and things like that, without a doubt. But I do think that higher deductibles, but with the higher deductibles, with an inferior product to what we used to buy, you're not only getting a higher deductible, but you're getting a tremendous amount of sublimits in there. And I can't stress enough how important it is to look at those things and how the language in that policy has changed to exclude or limit something that you would have otherwise thought you would be covered for because you used to be, or in your experience you were. And I think some contractors are missing that. Obviously, RAP policy, OSIP, CSIPs, that was like the invention of inventions in insurance.
Yes.
I mean, that opened up the possibility of $1 billion project, right? That possibility almost never existed until those types of insurance came along. So I do believe, I think parametric is like now getting its day in the light again. We all saw the failure of that, or at least I did, after Hurricane Irma. If you don't know what parametric is, I literally will put you to sleep if I say anything more about it. But that is something I think we're gonna, I just saw 2 more headlines just this past week about it. I haven't seen headlines on that in so long. So be on the lookout for that. That may be a possibility for different types of, different types of work. But I think insurance companies are gonna look a lot closer at your history, gonna look a lot closer at your partners and your banking partners and everything else to try to figure out what's the best for you.
Thank you. We have a few minutes until we hit the end of the mark of this chat. I'd like to ask our panelists to offer their 30-second take on what they think insurance services will look like 50 years from now. Long time, we won't be here, I don't know. Maybe we will, but what do you think it'll look like, Hector?
Well, we all know technology is booming. So we definitely see more automation, more data-driven, more insurance tech. So we definitely see it being more futuristic in the sense of how you'll be able to get your policy. You'll be able to see your limits right off the bat. It's not 70 pages. Like, I think we're so outdated with how these policies are. Sometimes it's almost like they want to confuse us. You got to go through every single page. So I think just technology in and of itself is going to help us all out. Driving data better, looking at loss ratios, history. But definitely, if I could say, technology is definitely going to be the leader in 2050.
Yeah, one of the big headlines through the pandemic and post-pandemic world was InsurTech. InsurTech was the shining star amongst investments with the SPACs and a few other things. But there is an absolute lack of adoption from insurance companies with regards to InsurTech. And that's, on one side, it's interesting because they're adopting technology to help to make them more efficient internally, but very little of it has anything to do with the actual claim side of things in the risk underwriting process. It mostly has to do with the actual management of their internal services and their relationships, the relation management with their actual brokers, but you don't see a lot of adaptation in the actual market, except for where they can minimize human intervention or involvement, but we've already saw the catastrophic failure of that. And some of the first online insurance company that you had. And so unless there's a more adaptation by insurance companies in wanting to provide or deliver data to their clientele, I don't know that the insurance industry will evolve that much faster than it is now. Although being one of the oldest industries in the world, most profitable industries in the world, it's amazing to me the billions that were poured into InsurTech and the number of InsurTech companies that have gone out of business just in the past 2 years. One of which I know, I happen to know one of the founders, 1,200 employees ramped up, multi-billion-dollar valuation, and overnight was gone. And he actually gave an interview to Property Casualty 360 where he was telling us that he could not get the insurance companies to actually adapt and use their services despite being able to show higher satisfaction amongst consumers, improve the value of those services. So in 50 years, that will make me about 92. I hope I know nothing of insurance at that point. I'm not in a diaper, and I'm enjoying life, and my children's grandchildren, or my grandchildren. But.
That's great. Maybe AI will replace us all, and it'll change the insurance industry in 50 years. So, want to thank the panelists, the attendees. Right now, we're going to go to the main stage. Please join us for Miami 2050.
Thank you, guys.
Thank you.